In order to contribute and save up into a Roth IRA, you need something called earned income. What is that? I've got that answer and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Love the Roth IRA. You guys know I love the Roth IRA. You contribute into it, and it doesn't save you anything on your taxes today. It's after-tax contributions, but the growth, interest, dividends, capital gains, all of that is sheltered while it's in the account. And then as long as you've held a Roth IRA for 5 years and you're age 59 and a half, all that growth comes out tax-free. It is an unbelievable deal. So if you are near retirement and you're thinking, well, I'm not sure, maybe I should just keep a little extra in the bank account, something like that, I would strongly encourage you, work with your certified financial planner and contribute to that Roth IRA and receive those tax-free benefits. Got this question from a fan of the show recently to one of the videos. Hey, listen, in order to contribute to a Roth IRA, I need earned income. Is Social Security considered earned income? And better yet, is a pension considered earned income because it ultimately came from your employer? Now, if you already know the answer to that, you might think, that's a silly question. You don't need to ask that. No. This is a great question, okay? Because both Social Security and pension income originate from your career, originate from your working dollars, okay? So these are legitimate questions. In fact, we should all have questioned these more seriously. I mean, think about it. Social Security. You pay into Social Security with your FICA taxes, okay? And where are your FICA taxes? Where do they come out of? Your earnings. They come out of your working career, your wages, your tips, your salary, that sort of thing. So you're paying your FICA taxes out of your wages. Your employer pays them as well. They match it. So you pay 7.65% on all of your wages up to a certain level, okay? And then 1.45% on an infinite amount of wages, okay? 6.2 of that goes into Social Security, and then the 1.45 is Medicare. But then your employer matches. They do another 7.65 as well. 6.2 of that goes into Social Security. So your Social Security, you're paying into Social Security from your earnings. So then when you get it back, does that qualify as earnings? And then same with a pension, right? Not every employer has a pension. A lot of government organizations do. And technically, instead of paying that money out to you via a salary, they're deferring some of your salary, and that's going into a pension that the organization has set up, the entity has set up, and then you're getting those dollars back to you in retirement. So it's a logical question. However, the answer is no. The answer is no. In that Social Security is not considered earned income, and your pension is not considered earned income either. And therefore, if you're in retirement and you're just living on Social Security, or maybe Social Security and capital gains or that sort of thing, you don't have any earned income, and therefore you're not eligible to contribute to a Roth IRA. Same thing with a pension. As logical as that may sound, listen, these dollars originated from my employer. They were earned but set aside for my employer and for me to receive in retirement. It's not earned income, and therefore doesn't count as eligible income to make a Roth IRA contribution from. So what does count as earned income? Well, I sort of alluded to it already, but your wages, your salary, tips, commission, those are all earned income, okay? Same with self-employment income, okay? If you're self-employed, that's considered earned income. Now, if you would just have a side rental, a rental house, and that's not your primary role, you're not in a real estate profession, you just have some rental income, that's passive income, that doesn't qualify as earned income. But for most of us, your wages, your salary, your commissions, your tips, and any self-employment income, that's considered earned income. Stretching that definition just a little bit, alimony is considered earned income, and so is combat pay as well. But the genesis of the question, where it originated was, listen, I'm transitioning into retirement, and I'm collecting Social Security, and I've got my pension, and I would love to figure out how to get more money, more of my wealth growing tax-free in that Roth IRA. Therefore, do these qualify? They don't. In order to contribute to a Roth IRA, you need to have earned income, but then you also can't have too much income, okay? And lastly, that too much income, that's all of your income, okay? That's your modified adjusted gross income. So it looks at, yes, your wages, all of your earned income, yes, your capital gains, yes, your interest, your dividends, and any IRA withdrawals or any pension and Social Security, all that sort of stuff. And your adjusted gross income needs to be below a certain level in order to contribute to a Roth IRA. If it's above that, then you can't contribute, but maybe you can still contribute to an IRA, just not deduct it. That's called the backdoor Roth. Same thing though, you need to have earned income. And so that same earned income qualification applies both to the traditional IRA and the Roth IRA. So those are the rules, but are you using the Roth IRA to its fullest potential for your financial life? Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.